Janet Yellen may have done a fantastic job of being uber dovish and effectively moving the US dollar lower, improving financial conditions, and ultimately we're seeing the S&P trading at the year's high and looking very strong. Pullbacks are being bought quite nicely there. But what we're not seeing is that US dollar weakness transcending into long positions in the oil price. Now, we saw a really strong run up in the May contract of US crude, well and nicely above that $40 a barrel mark. But yesterday we saw continued US dollar weakness, but that didn't transcend into oil strength. In fact, after the inventory number that we saw from the Department of Energy, which came in pretty much in line with expectations at 2.3 million barrels, we actually saw a decent sell-off coming through in the oil price. Now, that's really interesting for me because if you look at gasoline demand, very, very strong. Gasoline inventory numbers continue to be drawn down. If we look at what we saw from Cushing in Oklahoma, where a lot of this oil is stored in US crude, we saw a continued drawdown coming through there, which of course is positive. Utilization rates amongst oil producers in the US improved 2%, which was certainly higher than what the market was looking for. And actual overall demand for crude seems to be positive. And we're getting to a stage next month where we obviously get this OPEC meeting, which is potentially going to, we think, will include Iran and Russia as well, although Libya are probably going to be the only OPEC nation not to be involved with that. And of course there is continued talk about what's happening with production halts, although we don't think Iran's going to be part of that. But certainly after we saw that inventory number, which was in line with expectations, we saw a big sell-off coming through in that oil price despite what we saw from the weakness in the US dollar. Now that's very interesting for me. I think what we're looking at now on the daily charts is this range trade that we've seen through March where it was basically being sold around $40 and we're seeing good buying coming in around $38. We're now testing back at that low point in $38. I think a break of $38 and we can see $35 coming through. So I'd wait for a daily close below $38 where we've seen good bids coming into the market. Wait till those bids have given way. We'll wait for a daily close and I think we can look for a move down to $35 and perhaps even lower than there. What I thought was really interesting yesterday was this idea that despite US dollar weakness, we've seen the oil price coming off. And I think the inventory number on a net basis was actually quite positive. So the fact that we saw markets selling off really does tell me that there are some bearish forces at work. A close below $38, the bottom of this recent range, and I think we can look at short positions again.